A quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Hey, Coach Jay, hear you loud and clear. Um, and hello at the buzzers on this Monday before FOMC.
Welcome, everyone. Welcome to all of our buzzer beaters. Welcome to At the Buzzer, our market recap. Happy Monday. Hopefully, everybody had a Coach. How was your weekend?
Not long enough. No,
It never is.
it never is. No, it's good. We had good weather here. Got to the driving range.
Nice.
I need a lot of work. Practice, practice, practice. How was your weekend?
It was good. It was good. Spent some time with my sister and my niece, and yeah, just family time this weekend. It was nice though. Nice, but like you said, never long enough. But we love what we do. So when we get back the charts on a Monday, it does not work, at least to me. Hopefully, everybody in the chat had a good weekend as well. Welcome to At the Buzzer, our market cap. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. This is our first time meeting. I'm Coach Jay. I've been a top set performance coach since June of 2023. Been trading for the past 13 years and in the futures markets for the past six, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some experience, perhaps wisdom, and hopefully help you become a better trader.
Awesome stuff. And you are all our audience today. Thank you for joining us. And again, happy Monday. Pretty interesting day in the markets for sure. Let's go over to the Trader Hub to see if we had any news out. We did have retail sales come out this morning, 0.2%, when the forecast was zero point 0.6. There was also a housing index that came out at 39 when the forecast was 42. So a couple of misses on those numbers, but let's be real. The big number this week is coming out on Wednesday, unless we get some tariff talk before then. I think it was pretty quiet as far as that goes today, but we do have comments from the president saying, I will speak to Putin tomorrow. That's not going to be about tariffs, but he's talking. You never know what's going to come out of his mouth. You never know what's going to happen. So you could just slip in a tariff there and cause some volatility. But the big news this week is going to be on Wednesday with Fed rate decision. Anything you got on the news, Coach?
Yeah, found it interesting. The retail sales month on month was a pretty big miss. And the market rallied. So good news. I mean, bad news is is bullish news now. Um, apparently, but we'll find that out in the market, not in the news. So we held on good volume and rallied. Um, other than that, any random headline can come out and change things in a hurry. So continue to focus on your trading plan. And
And just to comment on that Fed rate decision right now, 99% probability of no cut, no change at all to rates. And again, that decision is on Wednesday. So if we hear anything different, maybe we get a big market reaction, or if the market gets what it was looking for, uh, do we continue to move up? Anything else you got on the news, Coach?
and that's it.
Get into these charts. There are 35 different markets we can trade with Top Step accounts, not just the equities. And today, to the downside, we had micro Bitcoin futures down a 0.5%, soybean meal down 0.65%, and natural gas, our biggest percentage mover to the downside, at 2.6%. To the upside, we had copper up 1.61%. Lean hogs up 1.82%. I believe hogs are making all-time highs. If I saw Coach Hoop say that correctly in the chat. And then wheat futures, our biggest percentage mover to the upside at 2.02%. To talk about our big four, we had crude oil up 0.49%, the S&Ps up 0.66%, gold up 0.29%, and the NASDAQ up 0.54% to at our big four. Coach, last week we like we do on Fridays. we look at the daily and weekly candles, and we talked about something. Shout out to Stephen Coyle. Uh, Kind of just reminded me of the move we were talking about in equities and what we got today, Coach. What are you seeing on this daily chart in the Nasdaq? I'll try to remember exactly what date that was we were talking about. But what are you seeing here, Coach?
We've accepted that lower value. The selling stopped as we talked on Friday. We broke Friday's high, and there we have buying or allocation at lower levels. Um, so we talked about this. This could easily go back to the 200-day moving average. Um, this market, the selling, basically the sellers stopped selling. I don't look at the volume. What was is that? Am I seeing that right?
This daily volume, yeah, this is 309. So the thing about volume right now, because we are in
Uh,
rollover, it's going to be a little bit off, right? So we're rolling from uh, December contracts to May contracts. That's right. So volume is going to be a little bit off as far as those reads go, especially for the daily. I think we did trade more in the May contract today, or June
May,
contract.
June. Thank
June
you.
contract. My bad.
We were talking soybeans.
Yeah,
You got
June
me going
contract.
there. But yeah, so that rollover, but and this is tricky. I'm glad you brought that up. Tomorrow, June will be the front month. You won't have to worry about it if you're on the Top Step X platform because you won't
For
have a
you.
choice. But volume data can get skewed. So I last I looked today was like 50-50 June. So let's double that volume. So we have average volume. Um, that what tells me that this market, this is short covering some bargain hunting. But it's not a huge allocation. But short term, pretty bullish. 2022 was it?
Yeah,
Is it
so
going?
that's what I had to go back and take a look at 2022. If you guys remember, we talked about this on Friday. If you were here again, Stephen, thank you for the reminder of what we did talk about. But we had what we said was a very similar pattern in these charts where we have these three indecisive candles on the daily. We sold off for 3 weeks. We found a bottom on a Friday, and then that Monday closed above that high and pushed up. And coach, again, it's almost like they're running the exact same play. Look at this volume here.
Yes. Was that on expiration too?
That was January 31st, so probably not,
No.
but
Yeah, but
very interesting. Very interesting, right? Same pattern. Um, Look at this chart, fit this to memory, and then we're just going to do a fast forward to today. Looks pretty similar. Pretty similar. If patterns repeat themselves, maybe we continue to push, but of course, anything can change and will change in these markets. Uh, but a
a
retest of
couple
that. Go ahead, coach.
couple keys to what's happening is we still had a decent sized range today, but it was less than the average true range. I have the average true range in the S&Ps at 128. We had an actual range of 108.75. In the NASDAQ, the average true range was 580, and we only did 408 and a quarter. So the urgency of selling is declined. Um, and so going back to my statement is the selling has stopped. It's I feeling friendly to this market. Um, I don't. First of all, we're day traders. So we go day to day. But I think tomorrow's opening is going to be important to see if we get some kind of buying allocation with good volume where we could see a series of days rallying up. But we will see. That's why when we're reviewing, getting to know the state of the market is important, but knowing your approach, knowing your trading plan, executing that trading plan is paramount. Um, so to me, I'm looking tomorrow the first 3 to 5 minutes. And if I see good buying, I'm going to
Hop on the train.
hop on the
Hop
train.
on the train. So let's take a look. I understand why you might be, leaning bullish to this market, Coach Paul. We talked about on the 30-minute chart, this 200 moving average being a resistance the entire way down. Closed above it on Friday, and today we held above it. 200 moving average being this white line on this chart. And if we look at last night's Globex Open, um, we never volume never left that range to the downside. Price did, but volume never left. This VWAP, this red line, never left that 30-minute range. So although it looked like initially it was a decent sell, uh, really no follow through on those lows. We make the low pretty much in the first hour of the market being open last night. Come back and check somewhere near it during London. But then it was a rally ever since. I think most of the traders that we have here are trading the New York session. So let's take a look at the New York session open. Uh, we did have that retail sales number out this morning. On fast markets today, Dakota and I both took shorts. Uh, you know, I think I took that short and kind of lost focus of the higher time frame picture, right? You know, this market was bullish from last night, right? Did it present an opportunity to take a short trade? It did, but if I was trying to get in with the trend, I should have been looking at opportunities to buy this market, which I did once we got off of fast markets, but we'll talk about that a little bit later. So here's the news candle, and then what happened, coach?
Yeah, that 50% mark.
I mean, why do they keep doing this? Why do they keep doing this? Blue Boy says, "Oh no, you found my secret Globex open range." Secret? There are no secrets here.
Yeah.
Amongst how many friends do we got here? I think we got about 700 friends. It's our secret. We share it with the internet all the time, but gotta execute it. Equilibriums, yeah, everybody knows, man. Some good stuff. So these equilibriums, wherever you decide to find them, we'll talk about one in a little bit here. That turned out to be, one of the better trades of the day. Uh, they present opportunities. Nothing is 100%. Hear a stat on the internet that says, "Hey, it works all the time," or "This is the only strategy that you need," or delete all your other indicators and use mine. Uh, might be a pitch. Uh,
No.
might be a pitch, but this
Mm.
seems to be a decent area to at least look for opportunity. Um, but like you said, coach, it wasn't easy, right? Especially if you're looking at that New York session. If you didn't already come into the market uh, in a long, the first outside of that 100-point move in the first 10 minutes, it was choppy.
No, it was choppy and it was this is why I kind of called it, this is further evidence of either bargain hunting or short covering. Um, so on that opening, we had high volume and a series of buys. But look at that. As soon as they stopped, literally stopped buying, um, we cratered. But what else did not happen here?
VWAP left the opening range to the upside and did not trade to the lower end of it. So range bound markets look for opportunities to fade the extremes. Those are usually going to come on high volume exhaustion moves, exhaustion type of moves, and we get a
Oh,
couple that. Go ahead, coach.
lo and behold, there is one.
So there's this one here. So there is a fake one. There's a fake out one, and again, nothing works 100% of the time. This is high volume right here. Uh, where this could be, and again, I don't want to. I did take shorts today. right? 735, I took a short here. This trade got stopped out. Took another short up here at 800. Why did I take this short at 800? Because VWAP started to flatten out, fade the extremes of the range. 800 is a major psych level. So if we don't have the volume to push above it, right? Price is going above, volume is 25 points lower. I can take a quick scalp short here. Look at with a couple of micros, it turned out to be a pretty good trade. But the one we're talking about, coach, where we got to close above here, got to close above. You could take this long. Stop is on the other side. It's a 60-point trade. Maybe you get stopped out there, but
Yeah.
eventually we get one. And maybe you got to take the trade 2 or 3 times for it to set up. But this trade here, coach, we we have this high volume. We made a new low underneath the news candle low here, that green. And once we close above the high of this high volume candle, which was at 19,680, that was it. Guys, we were talking about equilibriums. Uh, you guys, Coach Paul has named this the J trade. I appreciate you, sir. But
Well,
when we get a
you're the one who you're the one who brought it to everyone's attention. Um, it's well, you know what? In all sincerity, that's a trade that on the trading floor, um, more experienced locals could feel that and trade that. What I love about having volume right there and VWAP, there's no arguing about the volume. it, it is what it is. I mean, and it's organic. So that J trade two was off the lows of the session. And if you took the first one and you allocated your risk correctly, you can take the
We're
second
okay.
one. Um,
Great
risk
point,
not
coach.
the whole lot in
If
any
you over
trade.
leverage into that first one, you can't take the second.
Yeah.
Great point. Uh,
Um,
from a checkpoint, and we got a good question on this from Gavin. How do you set parameters for your trades? From a checkpoint perspective, this first one doesn't work because that VWAP never left the range to the upside. It actually didn't leave the range until the end of the day. But the added confirmation of VWAP leaving this second one was pretty nice here, right? We got a close outside, and why I wanted to bring up the equilibriums again. Stop could go right below equilibrium here, or that could be your entry. Let's not cherry pick the entry, right? Where you could buy above, right? Close above the high of that volume. So we're buying somewhere near 685, stop below that equilibrium. So we're talking about a 35 to 40 point stop. And that was the low of the day. So I really like what you said there, coach, about not over leveraging on any trade because we don't get to choose which one works and which one doesn't. We just get to put risk behind it and then let the market decide. Um, that's two trades. One could be a loser and one could be a 300-point move.
yes, difference between being aggressive and being assertive.
Yep.
Uh, Aggressive aggressiveness can easily lead to recklessness. Assertiveness is in control, confident, but in control. Okay, I'm confident this is going to work. It didn't. Well, it's not the end of my day. It's not the end of my account. Next one. Okay. So when you're doing that correctly, you can take the trades. Don't put yourself in a situation where you have one trade for the day that blows you out. I can't say that enough. Unless you're operating it at 90%. Even then, 10% of the time, you can get blown out.
Yep. Uh, Last thing I want to comment on this is the extension that we got from that VWAP. Right, this VWAP is the low of the day or low of the New York session, we'll call it. Um, the move that happened in Power Hour. So I think the house account got long in this consolidation, which is fine. Again, no one knows that this is going to happen. You can have a hypothesis that it's going to happen, but no one knows, right? You could also have a hypothesis to the upside that the market's going to take this out. The only reason I don't love longs here is because of the rejection that we had at these highs, right? All of the volume is lower. We can see that anchored VWAP, we're almost 150 points away from it. Um, so the likelihood that we're going to see new buyers coming in at that point just feels a little bit lower, right? Here is the full session VWAP. We were almost 200 points away from it at these highs, right, Coach? We've talked about this extension. When we
Hmm.
get that far, uh, and then look where we sell off to, right? Right on the close, right back to that anchored VWAP from the low of the day or low of the New York session, um, for a pretty nice trade. You can see that this account, this is an ineligible trading combine. I was just practicing some stuff. All of this P&L came from this, you know, seeing the rejection up at 19,950, thinking that, hey, we're probably not going to get much of a directional move before FOMC. And in this consolidation, taking shorts off of this candle right here.
Nice. Now, here's another thing. To put it in relative perspective, when we made that low, okay, the J trade,
Yep.
what time was that?
This was
Halfway through the
11:33
day
Eastern, so 10:33 Central.
with no news.
Right.
So this is pure day volume variation. Now let's look at the half hour. What happened at that time?
Very indecisive to the downside, half-hour candle.
So that half hour candle, what kind of volume did we have?
Almost the lowest of the day on the 30-minute. Selling stopped.
Okay, so this is important in our and analyze when that happens. Most likely, high probability. And look at that. That's a wick. Hit stops or old selling. I don't know, but I do know this. It's selling, but it's light selling. That would set up exhaustion to me.
I wanna poll the chat real quick. Anyone who was trading the equities, whether it was NASDAQ, ES, was anyone short down here? Just to get an idea, right? Because we talk about the analysis. Hopefully, when we're talking about these things, we can start to realize them in real time. And if you're trying to figure out, and we say it all the time here, know what it looks like when your playbook doesn't work. If you were trying to short here, why didn't, from a volume perspective at least, you don't look at volume, but from a volume perspective, how can I now use that analysis to figure out why my trade didn't work, right? That's ideally what we're doing here. I do it with my trades all the time. That short from 735 that we were in, why didn't I know exactly why that trade didn't work out? Because VWAP was flat, there was no volume behind it, and at this point, I was short at the low of a what was a range bound market at the time. Why did the one at 19,800 work? Because I'm short above a flat VWAP where flat VWAP says range bound market tells me fade the extremes. Now, the same thing at these lows here. From a volume perspective, why didn't a short work down here? We're so far away from volume that there's not enough to continue this push forward. Um, so we go the other way. And I see some traders. Shubham says I was short, quickly covered. Time says I was always scalping. So okay, um, I don't trade at that time since Trump is a very strong reversal time. But just interesting to see, if you were short here, however you analyze the markets, try to figure out if your short didn't work out, why based on your strategy. Volume perspective, we were just too far.
Yeah, and you know what? If you were short, I like to hear it. And I was out.
Yep. Yes.
Out.
Yes.
Yeah, it's
Yep.
not working. If you get stuck, if you have to be right, this is where problems happen. Um, the higher it goes, you might be tempted to sell another one to average into a from a loser to a winner. Um, and when you learn these lessons, I mean, really learn them, you can survive. But I know this kind of market like that with those kind of moves, it's so easy to try and get that money back
Oh yeah,
by
it's,
adding to it.
yep.
Um,
Yeah, it's like, oh, my trade location was bad. It's okay. I'll just put on another one in a better spot. I've done it too many times
uh,
more times than I would want to admit. Um, all right, we got some questions in here, and also for Brad, real quick, I want to check the ES. Brad was talking about a candle at 12:33 Central Time. Okay, so you're talking about this 12:36. Okay, so this candle right here. Brad is asking, can you trade off of this candle right here? So yeah, I mean, I would definitely be looking at this candle. Why do we look at this one here? See it like this? Is that's significant volume for that time of day. At this point, this is the S&Ps. This is uh, 136 and 3 minute candles. This is the 136 Eastern time, 12:36 Central time. That candle, based on volume, was about 4 times the volume average. So it's significant based on everything else around it. So what would we do? We frame out the candle, attach VWAP to it, and see what it says from there. This is where I'm looking for longs. Notice I didn't say it, oh, let's just get long right here because volume didn't leave that range yet. This could easily be a reversal candle. But once we get this volume leaving the range, now I'm looking for longs somewhere against this VWAP. Stop is on the other side of it. And yeah, you could 100% take that trade.
Great. By the way, great eye.
Yeah,
So
seriously.
you have
I didn't
that.
even see that.
When we were seeing this, it was 3 or 4 times the average. That if it was average, I'm just okay. Um,
All
I'll
right.
put the VWAP on it, but now
Yep.
that I'm a little more assertive. Can't say aggressive because I've killed that, but I see that. What's my risk? I like that trade. Immediately seeing that, I like that trade.
It's an
Just
amazing
start
trade.
right there. Why? It's man, that volume meant something. Couple things. That was new highs of the day. So someone was asking about confirmation. Well, that that's beginning of allocation. This wasn't a bunch of day traders at that time saying, "Well, this is a good trade." That if you get 4 times volume, it has to be a large participant. Right? So they came in at new highs to make new highs. Price really doesn't matter to them. They're allocating capital. So that low to me is okay. That's where I think it's going to hold. Where I'm a little more guys, it's like okay, I'll buy it anywhere in there.
We're in the candle. Yeah.
Yeah, you because
It,
usually in those you don't have too much wiggle room. It's gonna go. If it doesn't, I'm willing. Okay, how much? You know, this is like reading a poker table, right? I you you get a draw that works. Okay, now you have more information. Uh, um, Now you can say, "Oh, look, well, you knew that was going up." That isn't the point. The point is to read volume and order flow. That wasn't just a random purchase. That was at highs of the day with big volume. Whether that buying was short covering from a larger term perspective, we will never know unless they tell us and give us their accounts. That
or tell
doesn't
me.
no. You know, it's interesting. A couple of candles later, up there we go again.
Get it again. Yep.
So let's go from there. Heck, you might even add. I don't know. Well, it depends
We're
how.
talking. Now we're talking. Now
If
you're
you,
being assertive.
yeah, now you okay. Now I could. Now it's most likely it's the same entity that's big. We need more, and away we go. So great, excellent look. But with these trades, you're later in the day, right? You're at the highs. Don't think they're going to be 4 to 1, 3 to 1, 2 to 1, or 1 to 1 is your objective. It's worth the risk.
Couple questions here. Coach Vince had a good one. He said, "What did the volume look like at the highs of the day when it turned around?" It wasn't a whole lot. There, so at the low, how we got this reversal at the low, where this move almost happened fairly quickly, right? Where we got that volume exhaustion. We didn't see the same thing at the highs. We kind of just saw volume die out, right? Where at these highs, we saw price in the S&Ps make a 50-point move on, you know, not much volume to kind of talk about here. And again, it is rollover, so things look a little they look a little different with the volume numbers. But at the highs, we didn't really see that immediate reversal. Uh, and it was a slower trade. I think this is more of a level to level trade than anything, right? Where we traded above 5,700. There wasn't enough convinced buying. We actually see volume decreasing as we're approaching a major level, which is a little bit concerning as well, right? If you get above a major, you want to see volume increasing to continue to push us above it. We got above that major, and volume is going the other way. Uh, so it gives you an area. There wasn't as quick of a, you know, hey, yeah, that's a reversal candle. But even then, the candle that made the high, uh, once we close outside of it, risk the other side, and a pretty nice short. But really good question there, Coach Vince. Um,
You know what's interesting? That break, where did it look, that high volume buy that we were talking about, the first one,
this one here, we just go right back to it.
right back to the yeah. So that traded out, that imbalance traded out because there wasn't, like I said, there wasn't very large selling. Whoever bought, whatever entity bought it, put an imbalance to the buy side that got traded out. And once it got traded out, it looks like, because without big selling volume, it just went back to that original price. Um, I mean, right there. So that'll be a key. I think that's a key level for tomorrow too.
One more questions we got here. We'll just do a quick rapid fire. Lewis asks, or Luis, what if volume never increases and it continues to go up? If I see this market continuing to go up and there's never any volume behind it, I am looking for a place to short it. I'm, I'm saying that right now. I'm not going to try to call the high, but as soon as we get something that looks like a 3 bar reversal, I actually want it to go as high as it wants to go. Um, right? Just keep going up because the fall is going to be that much better if that's the case, right? So for me, I'm not going to just blind short it, right? And I think that you have to be very conscious of doing that, especially reading volume. But the more extended we get away from this VWAP without pulling it up towards it, whatever that reversal move is going to be a big move, right? And it's going to be a short that's willing I would be willing to wait for. Because I don't need to catch the exact high, right? I think where it gets very dangerous is if we say, oh, this is the high, volume is decreasing, so I'm going to short it here. Notice what we don't get. Look at all these orange candles. Notice what we don't get, maybe with the exception of this one, but you know,
That's below average volume.
below average. We don't get any closes below any of these orange candles on the way up. So if you preempt this move, you might get caught in a false breakdown. What do we get up here? We get a close below that orange candle. This is almost just take the trade right here, right? Because this entire move, and it went pretty far away from that VWAP. That entire move happened on low volume. So whenever that reversal is going to happen, it's going to be a big move. You just have to be patient for it.
Yeah, I like to say is identify when the buying fails.
Yep.
So it's going to happen, or price. I like price volume, but a price, we had a bigger candle than we had all the way up. So if we think of order flow, y- the buy orders have been filled. They stopped. Um, it's like
We,
musical chairs. Music stopped, man.
we got a ton of questions, and I'm trying to think of how deep we go into a volume class. Any other markets we want to discuss before we go
Let's
off of
go with the
volume
questions.
deep end? All right, let's go with the questions. All right, Keelan, real quick question: what is the tool you're using to draw the horizontal ranges? It's just the fib tool, and I have 0, 50%, and 1 checked. Fly God says, "Hey coaches, do you ever use volume profile?" I don't. I see the value in it. I know Coach Ray teaches it, and Coach Vince as well. I don't use it. What about you, Coach?
I used to use it. I've used volume and VWAP. It's just easier for me.
Same.
Um, but it's a great tool. And I would say observe it, learn to use it. Maybe it works for you better than this, but it's a great tool. Um, and it gives volume distribution. Um, and some it's a good so I don't use it anymore for many years because once VWAP can't I like VWAP. It works better for me particularly. It might not for you.
The important thing for me, right? Anything we say here, if it doesn't work for you, you don't have to use it, right? Find out what works for you and go from there. But I definitely see the value in using volume profile. Um, what if okay? So we got that one. What if volume increases? Is a good method when you appear to be in a range to take only buys when price is above session VWAP. If we're in a range, Chauncey, I'm actually looking to sell above VWAP. Clear that it's a range and VWAP is flat. And I'm hesitating to say this a little bit because once we got, well, actually, once we start to break out of here, we're no longer in a range. So that might mean that you're not buying anything below this high. But once we break above this high, we're no longer in a range at that point. If we are in a range bound market with a flat VWAP this way, I'm looking to sell above it and buy below it.
Mhm. Conversely, with me, I want to see if we're in because I'm notoriously bad in ranges. I
Same.
know that, but what I've learned it looked at is what first bar on the opening is the largest volume and it's buying. Okay. That that's valuable information to me. That means the bigger players bought it. We've held that low. What you just said, look for buys. Yeah, I can with that information. Now, if it was red, I wouldn't have that. I wouldn't lean that way. So looking at the original allocation, to me, I'm to a point I don't look at the night and the day are two different sessions and I treat them that way. Well, it's just so on this, if I just didn't look at the night, I'm looking right away. There's buying. It's good volume. While VIA WAP went flat, never took that buying, never took that opening range out. I happened to get long two micros with a stop with two ATRs after the first. Didn't get stopped out. Quit watching it. Like if here's it, if I'm staring at it, watching it, it's good, it's bad, it's good, it's bad. If that happens to you, it's called anxiety. And the enemy of good trading is anxiety. 'Cause it will find a way to press your button. Um, I was comfortable. If I'm wrong, then I'm wrong with the big money. But it's a great question, and believe me, it's not easy. That's why Pete Stottlemyre told me once. He goes, "You need to start learning to trade one side." And I was in a tailspin at the time. Why? My worst trading days, and this happens is when I'm trading both sides of the market, just chasing to be right. And when does it end? Like it, that first, what was 11:30 before we even got a decisive trade.
So I think I get a little bit about what Chauncey's saying here, because Chauncey says I sold at the top of the move before ES went up like 40 points, right? And this is going with the yes, in a range bound market, you're selling above the session VWAP and buying below it. That's why we have stops and we quickly admit whether or not the trade worked or not. The ES could have went up 400 points. If you were only risking 12, who cares what happens? Right? Because this trade, the trade selling above this VWAP was good for 20 points there, another 20 points there, maybe 35 points there, right? It was a good trade. If the one I end up taking does this, I can't say, well, it should have done this. So now I'm going to add 5 contracts because I want to make money. That's how we get blown up, right? So we have to, and D just said it, the range is the range until it isn't. We have to admit when our trade idea is wrong. And if that's how we blow up, everyone who's here, who you do this day in and day out, no one is as bad of a trader as you think you are. We just have to admit when we're wrong. And that's the hardest thing to do, right? It's I built up all the confidence. I built this strategy. I built up all the confidence to finally take it. The one I take goes without me. A lot of times, what happens is we ignore all of these, and then we take the frustration trade when the uh, the later in the day this goes. And Shanti, for what I will say about range bound markets is the likelihood that we stay in a 40 point, 35-point range in the S&P for the entire day is pretty low. Maybe on FOMC day, but the likelihood that we were going to stay in this range is pretty low. So once we started to break, I just have to admit that I'm wrong and leave it from there.
Yeah, that's consistent risk taking.
Yep.
Don't you know? I can't say it enough. If you had a here's a rule for fund managers: any any invest is 1% risk of total equity. Now that's not practical for day trading and for prop trading, but 5% on any one trade is probably the max. That's why I break it down to it 12% of the total equity for me. It comes to about the $100,000 combine comes to about $350. Well, I can't, I'm going to risk $350 on the one trade. I'm just not going to do it. Um, because the idea is to stay alive. And then why? Because if you truly have an edge, that edge doesn't come from trade to trade. It comes over a large amount of time. So if you find yourself over leveraged, man, you can't afford to be wrong. And if you can't afford to be wrong, you're gambling. Great question.
Great conversation here. How do you tell the difference in real time from high volume at the low of the day versus high volume at the high of the day? Uh, I will say with some of this volume stuff, it is feel, right? Where if you're watching it over extended period of time, get an idea. Um, there's been times where I see a volume move happen, and I've just seen it so many times where I'm just like, hey, that could probably be the low for the day. Um, but I think the way you never know until it is the low. How do you know if something's the low? Is when it just goes up and never makes another low. But how do you trade that, right? It's for me continuing to anchor VWAP and see what the market says, right? This one could have been the low of the day. What happened? VWAP never left that range to the upside. This one did. And with that, I think a lot of times, and we say it all the time, people try to figure out how I could have bought this low right here. Only I could figure out how to buy this low. The problem is you don't know that that's going to be the low. Could it have been here? Could it have been here? Could it have been here? So I think our job is as day traders is to wait for that confirmation a little bit and then use that low as a you know potential to limit risk here, right? Where hey, this looks like they made the low. We got some confirmation that candles are closing above it. Now that's my spot to limit risk. Um, All right. Any other markets we want to go through, Coach? I think I saw some RBOB in the chat. Anything else you're looking at? We spent a lot of time on the equities, but I think it was a good conversation.
Well,
So
let's go.
I'm okay.
Someone want to see our Bob. Let's go there.
Take a look at RBOB gasoline futures. Uh, these new baby, she said. Uh, looks pretty good. What do you? Let's go out to a daily, Coach. What are you seeing here on the daily?
It kind of looks like the S&P and the NASDAQ.
Yeah, it does actually.
um, but off that off that low of the move, which was a double bottom, we had that big candle that took out the, well, no, not quite an engulfing candle, but it took out the high. Like we said, it took out the high of the low of the move. Simple. That's on a price basis. So now for me, I'm on a longer term, a swing trade, I'm looking for shorts. Now on a day, what is the immediate? Well, that's where the half hour comes in.
You said
Okay,
RBOB is in rollover as well.
all right. And then energies, that rollovers there quite a bit, because it expires month to month. So last night coming into today, we were above the 200 on a half hour. Okay, short term. Think about this. Go through a process. What are, who's in charge, or who has the advantage? Buyers or sellers? A simple thing. If you can't determine it? It's not. Find another market. um, Here, short term. Buyers are in charge. Okay, let's see what happens on the opening last night, Sunday.
That half an hour. If you want to go to a shorter time frame, we can. Let's
Well,
go to.
yeah. Let's go to a 5 minute, 3 minute. Ah,
It's the same candle. They bought
it's
it
the
right
same
away.
candle. Yeah. Now I ask you, I'll go back to the audience. What does that mean? So the 3 minute, 5 minute, 30 minute are all the same size.
Somebody had to buy it as soon as it opened.
And there you go. I mean, now where do you find buying opportunities? How do you trade it? Well, you could use VWAP. You could use volume profile. You could use whatever it is. But when someone was asking about finding a trend, well, the short term, that trend was established right on the opening. It was bought, held the low. It was a lot. It was a large opening range. So that's urgent. It wasn't like someone was like, well, if it breaks a price level, I'll buy it. No, they had that person or that entity had to buy it. So um that gives me a bias. I'm only looking on a day, I'm looking for buys.
Says I use time of day after 9 a.m. Central Time. I look for reversals. Here is 9 a.m. Central Time right here. Pretty good short, right back into where that high volume came in. Shout out to D. Uh, Looks like a nice range bound market to trade, right? Where that range is kind of clearly defined. We get this high volume. I'm looking at this candle right here. And then we had the one from the open. Kind of just ranged in between those two.
Now this one comes back to yeah, again, you can either look to buy it or sell it, and the market itself, the higher volume trader is an entity that's see with unleaded, there's not much um public participation, speculative money. It's an especially in commodities. There's the producer and then there's the end user. the versus equities where there is buyers dominate over time. Um, so right off the opening, we saw that the end user was very urgent. So that's how I would set a bias. Now, I'm not trading unleaded, but if this is the next stage, is you would have to have a trading plan, like Coach D just said. She looks for certain setups. That's a plan. Execute your trading plan. Um, and then find a place where you can do it. Now, using volume gives you a lot of information versus just price. Um, and unleaded, they don't have minis in the unleaded, do they?
think so. Not that we can trade. Not that we can trade. I don't know if those contracts exist, but not that we can trade at Topstep. Just to do a quick look at the other markets that we have. Remember, gold is making all-time highs. Made
Mhm.
all-time highs on Friday. We traded 30.10 as or 30.11 half about as the high of the day today in gold. Maybe basing before the next rally up. Gold is bullish.
Boy,
You
look
know,
at that selling. They got absorbed. Is that a J trade? Was that the low of the day?
so we closed above it. If I'm looking to buy gold tomorrow, looking, yeah, maybe to buy at the highs of this range, risking the lows at this point. Uh, Gold is looking very bullish, and who knows? Gold likes to do this thing where it rallies and then it consolidates, and it rallies and consolidates. Could we consolidate for a couple of days here? We could. There's a potential catalyst that's going to move the equities, probably gold as well on Wednesday. So, do we consolidate until then? Potentially. Uh, take a look at crude oil real quick, and then, Coach, any other markets? Anything on your scouting report that you want to take a look at before?
Bitcoin,
All right, Bitcoin, crude oil. I can see why D is looking at RBOB. I'll say that. Uh, let's
rude
look at
oil.
Bitcoin. Here we go on Bitcoin, Coach.
Well, what's that white line?
200 moving average. This is a daily chart here.
Daily
Uh,
chart. We're holding it. Um, and we're holding it for a few days now. Um, this it's finding some support. That yellow line is the 20. I think at least if we'll, we're in between those, but then get down to that 200 daily and start looking at the half hour or the 5 minute. See if you can identify buying that gives you an edge. Um, if we go to the half hour today, hmm, there's an edge, and we bounced along. We're holding that on the half hour and the daily. We've had this big break. It's finding a level, a balance, trading on both sides. Um, if Sailor buys another couple billion coins, we'll probably rally. Um, we, but the volume will come in. But moving average, what has happened? It's flattened out.
closing above it. This looks just like the equity charts.
Oh yeah, look at the S&P real quick. Bring that up.
Yeah, it's the
Look at
same
that.
chart.
It's the same chart, and look at how flat the 200 is.
Yep.
The 20 has moved above it. The 50 has moved above it. It's definitely found value here. Can this continue? Oh, yeah, it could break. Whatever. I'm looking favorably on the buy side myself. I might be wrong. but it's not going to blow me out. I can't say that enough.
Yeah,
But Bitcoin is doing the same thing. It's a stock now. Um, this is going to change the world. I don't know. All I'm
I just
looking
trade the
at,
charts.
I just trade. By the way, we are, I shouldn't say just, we're traders.
Yep.
It's and short term at that. But that's giving me a sign here that it's finding we know this. It's found balance. Markets move from balance to imbalance. Imbalance gives us direction. Short term, long term, either way.
We got one more question here from ER. If you guys have any other questions, let us know in the chat. I don't think I have any other markets that I want to talk about. Uh, but ER asks, what is the best, most efficient way to identify? And if you can hear my dogs sleeping right over there, what is the best and most efficient way to identify the trend on the short term? I ask because my big problem is flip flopping. Coach, I'm going to throw this to you. I just want to comment on this real quick. Um, I think you have a really good way of identifying the trend, especially on a medium time frame. Um, the flip flopping, what I will say is, if you're flip flopping, you're not trying to identify a trend to join. You're trying to find a trade to take. Because if I'm trying to identify a trend, I'm only taking one side, right? So I shouldn't be buying and then selling, right? We can't. If we're trying to identify a trend, we have to give it the time and the space to develop. Um, like we were talking about with the S&Ps before, right? Where we had that high volume move at the low. Someone might try to figure out, and there could be a way to figure out how to buy this low. But if I'm looking to identify this trend, I can let this establish first, let the market prove that it's trying to go up, and then go from there and not have to catch this low. But if my goal is to identify a trend and then trade with that trend, innately just in that comment, I shouldn't be flip flopping, right? Because if I'm flip flopping, that means there's no trend defined. And Ben says, unless their time frame is too short. Coach Paul, how do you identify?
Um, Couple simple ways: the 200 bar moving average in a time frame. Um, so like we talked earlier, one of the things, if you want to go with the trend, and Coach Jay said it really well, you shouldn't be flip flopping. I'm not here to beat you up, but
Oh,
what
not at all.
happens, and this is is you're trying to make money. Um, what happens in that mindset is the first trade you wanted to buy, you bought it, and was could easily today lose money. Well, shit, I'm wrong, and it's still we still have that recency bias of this huge break. Oh, oh man, here it goes. It's done. I got to get short, and then it rips you the other way. So, and I suggest to you find the 200 moving average, find VWAP, look at the open 5 minutes, see if that what's working in the trend that you think, and trade with it. One side, be one side. Don't You probably lost, probably got frustrated and got short. So if you cut those trades out, you still might have bought this today and lost. But if you're flip flopping consistently, you're not following a trend, do something simple. Keep it simple. Where's the 200 moving average? Where in the time frame? Where's VWAP? Start there.
We go. Anything you got before we go, Coach?
Um, yeah, focus on your trading plan. That was a great way, like question to end this. Um, don't try it. You don't have to be right. You just have to trade right. Without a trading plan, you're very vulnerable to whipsaw action. So focus on your trading plan. It will become clearer and clearer what your job is when you do that. So with that, happy St. Patrick's Day, and I pass it off to you, Coach Jay.
Focus on your trading plan. Focus on your trading. Focus on the uh, future that you're building by trading futures in your own life, and how this fits for you. Uh, Whatever content you're consuming or whatever it is, hopefully it's in the interest of making you a better trader. Because should ultimately be the end goal for all of us, right? You see Coach Paul and I on here every day. You see, different people come in and out on Topstep TV and different trading streams. We're all playing the same game. It might not seem like it because we're on the stream, but we are all playing the same game, right? So at the end of the day, anything that I do in this space should be in the interest of making me a better trader, and that should be the focus. Uh, Thanks everyone for joining. If you haven't done so already, hit that like button on the way out. And Abby says it, and I'm gonna add a comment to that. If you don't use a stop, you're vulnerable to market whooping your ass. Enjoy the rest of your
Amen.
day.
Amen to that.
Uh, e Enjoy the rest of your day. If you're celebrating St. Patty's Day, don't do anything Coach Paul wouldn't do. And we will talk to you all tomorrow. Have a great day, everybody.
All
Bye.
right.